Hi guys, how are you? My name is One Titanium. Welcome back to Evidence-Based Economics and Investing. Um, I'll give you a little spiel to start off this video. I'm going to talk about the markets and we'll talk a little bit about currencies and what's going on overall. As many of you uh, who know me from Mind This One, uh, Mind This One alone, not Titanium, um, you know that I had a channel before that I was running from 2011 2012 um, all the way till recently, debunking idiots, people who come out on television and pretend they know anything about economics or the markets and telling you that the market was going to crash. People like Peter Schiff, who were saying, oh, then Dow 10,000, who cares? It's going to go lower. You know, the Fed should get out of the way because the market's going to crash anyway. They're out of bullets. It's the plunge protection team, the government manipulation, the government this and government that. And I certainly do understand how people can fall for that stuff because they're not traders, they're not investors, they don't understand economics, they have enough things to deal with in their own lives. But it sounds good, you know, that whatever problems you have in your life, it's not your fault. It's the government that's fucking you, right? So it's a very good selling tool. And you add some greed into that you can make some money shorting the markets. Uh, and guess what? People are going to flock to you. You know, they're going to come and start listening to all your nonsense. Fear sells. I mean, it's just that simple. Um, so, anyway, um, over the course of my Mind This One YouTube channel, over the years, course of the years, um, I made some really nice calls, big calls on the top in gold, on the top in oil, that the stock market was going to continue to go higher, among other many calls. And people started asking me that, you know, well, how do you do it? How do you know these things are going to happen? Well, the fact is, I don't know. Um, I have no clue, but I do know where um, how to read a chart, how economics works, and where there's potential areas of likely reversals. And when those areas start flashing, I started to make videos, and I started saying, "Hey, you know, this is this is what's likely going to happen next." Now, I'm not a fortune teller. I can't tell you that today this is going to happen and then tomorrow it does happen. Okay, it takes time. It takes usually a couple to several months for something to play out because what is today's sentiment is going to change, right? So we're going to take today's sentiment and exchange it for tomorrow's sentiment. And that can be seen in charts. It can be seen in contrasting real economics with charting and then comparing the two and saying, okay, what's likely to happen next? Do they agree? Does this make sense? And teaching people how to do that over time has proved to be a very worthwhile adventure. Um, I'm enjoying it. It was hard in the beginning just to get some people to understand because it's completely different than anything that um, any book, any website, any social media, any webinar is going to teach you. Because what they like to teach you is nonsense. They'll show you something like this, and they'll be like, well, you know, this is overbought, and this is overbought, and it broke the trend line, and it broke here, and this is overbought here, but you know, and you look at this, and you're like, what the hell? You know, this is like rocket science, you know. And this guy who's trying to teach me understands all this stuff. Wow, you know, let me give this guy $125, $200, $250, so I can learn how to do this, and then I can be rich, and I can stop working. Well, it doesn't work like that. Okay, nobody's going to write a book to tell you how to really actually read a chart. Okay, and be successful at it. Unfortunately, 90 to 95% of all retail investors lose their money, and they continue to lose their money for very long periods of time until they finally capitulate and the market is rigged. It is so much easier to just say, well, your market is rigged. It's the government. It's this and it's that, and this is fucked up and it doesn't make sense. And instead of just accepting responsibility that, hey, this shit doesn't work because I don't understand what the fuck it's doing, right? You see see what I'm saying? So what's appealing about forex and stocks, and why is it such a profitable business? Because you go and you put some money inside of a trading account. Let's say $5,000, 10,000, whatever, and you open up this MetaTrader or whatever you use, and you say, look, there's a buy and a sell signal, and you believe that the way to make money is to guess better than the next guy. And of course, everybody believes that they can guess better than the next guy because everybody believes that they're smarter than everybody else. It's just a fact of life. So you start to buy and sell, and the market starts moving, and all these little indicators start doing, I don't know, whatever the hell they're doing. And sometimes you win, sometimes you lose. And it's kind of like prayer. You'll sit here and you'll pray and you'll say, no, I hope that this happens. When it happens, you're like, see, prayer works. It happened. God, I love God, or whatever, When it doesn't work, well, don't worry about it. Don't question. It's God's will. Okay? There's other plans for me. And you just kind of rationalize it. Well, it's the same thing in stocks, right? It's confirmation bias, that sometimes trades worked and sometimes it didn't. It's a 50-50 chance. It's a coin toss. And then you spend thousands and thousands and thousands of dollars believing that you are just going to stop your work. You're going to become a day trader, which is ridiculous. And you'll spend your days guessing better than other people and making money at it and feeling good about yourself because you're right. And, if only you can just figure it all out. And, you'll spend thousands of dollars doing it. You'll buy books, you go to webinars, you buy subscriptions, and you'll do it. But I'm telling you, you will lose your money. Not only are you going to lose money in the stock market, but you're also going to lose money in buying silly little books, okay, and silly little programs that are going to make you rich. None of them work, okay? There's the book on the MACD. The MACD is doing this, and there's divergence in the whatever. There's books on stochastics. There's books on RSIs. There's books on candlesticks. And you can, look, there's a wick. It's a wick here. This is a reversal. There is, does this is a line chart. Does this change anything? No. How about this? Does this change anything? No. Okay. But you'll go out and you'll spend all this money that you can get for free online and try to find that secret. And the truth is, for these three indicators, there's hundreds and hundreds more that you must learn. And every single time you go to another indicator, another moving average, or another whatever, you're going to think that's the holy grail of analysis, and you'll be able to predict better than the next guy, and you'll become Buffett. Truth is, you're not going to become Buffett. And every era in the stock market or in the economy, there's somebody that's going to come out and appear to be right. It was Peter Schiff at some point, and then there was other people in the bull market that appeared to be right and then ended up being wrong, and and that's the crowd follows these loudmouths. I don't. I've learned not to, because I was one of these people, and I learned better. I learned to get the facts. I learned to base my analysis on evidence, and if it works over the course of time, then it must be true. Okay, Occam's razor. The information with the least assumption is usually right. So all these things you see in here, all they are is just noise, things to clutter the mind, things to find excuses why something didn't work. and then hopefully, just out of sheer luck, 50-50 coin costs, you might get some trades right, until you blow out your account. So I've learned to go from this noise to something as simple as this. And I can pretty much tell you, you know, with a, you know, fair amount of certainty that this will probably come up, come down, and then break out to new highs. Okay, that's one possibility. The other possibility is that it breaks down from here, and then I know how to react there. And that's what I've done throughout these recent years. Of course, I started out like everybody else, where um, I went through the whole shabil of reading books and webinars and subscriptions and all that stuff, just like anybody else. But eventually, I figured it out that none of that stuff works, and have concluded what does work. And it doesn't matter what time frame, it doesn't matter what chart, it doesn't matter what happens. I can read a chart properly today. My goal was to keep this all free for everybody, and I wanted to teach everyone how to do this, who is willing to learn, of course, in real time. Unfortunately, my channel was attacked by real progressives. It's a cult. They think they understand economics, and they don't have a clue. All they are is a bunch of free lunchers. When I called them out on it, that some of the economic nonsense that we're talking about was incorrect, and corrected them, well, all those idiots came over to my channel, mine this one, and they attacked it and they spammed it, that this is not proper contact and whatever, and shut it down. Now, you think YouTube is going to go in there and start investigating and going through all the hassle? No, they're going to see a spike and people saying that this is not proper content or whatever. They shut it down, and it's as simple as that. And the reason that the real progressives never wanted my channel to go forward was because they knew that if I would have started to expose them, that they would be wiped out, because they don't have a clue. They don't have a clue as to what they're talking about. So that information cannot get out. Okay, so they had to do it. Well, it doesn't matter, because I'm a kind of guy that doesn't give up. Right now, I had to change my format to a Patreon subscription service, and the reason is I doubt that anybody's going to go out and spend $5 just to spend a video down. Okay, they're not going to do it. So unfortunately, I have to charge that $5, so this doesn't happen again. I don't want the bully on the fucking street, on the beach that comes around and kicks my sandcastle because my sandcastle is better than theirs. I don't need that. Okay, but I do want to help as many people as possible. And if you're interested in something like this, and believe me, it's not about traders. It's not about being an investor, or that you're going to become rich, or that you're going to quit your day job. It's not about that. It's about understanding real economics. It's about understanding how to manage your portfolio in your 401k. It's about making good educated decisions as to when you should invest for the long term, and when you should reduce your exposure to the markets. If you're in stocks, or when to buy a house, when not to buy a house, when things are cheap, when they're not. That's what it's about. And I don't encourage anybody to use their real money. In fact, I discourage it. I advocate that people use practice accounts until they are good enough, where they feel confident enough, if they do choose to go and trade, that they trade their own money based on real knowledge and real proof of consistency over the course of a year. It is not difficult to understand that when deficits, budget government deficits, are at 10% and the market is down 50%, that you should probably be buying stocks for the long term. And when deficits are at 3%, and I would argue that it's a balanced budget, but I'm not going to get into it now, that you probably should not be fully invested in the market. Okay, you want to start to reduce your exposure. That's not difficult to prove. You can just go on any map, on any chart, and you can see it for yourself. Um, it is not difficult to understand that the market goes in consolidation and then thrusts up, consolidation, thrust down, consolidation, thrust up, and that's what the market does. Okay, that's a fact. That's what it does do. Okay, and knowing how to read these consolidations and being able to understand which way the direction is likely, not for sure, likely going to move, um, you can take your positions accordingly and manage your risk reward. Okay, that's what I teach people how to do. I can tell you that over the course of 13 years, that this big M pattern is likely going to resolve to the upside because this is an index, okay? And the economy will continue to grow. The 500 biggest companies in the world are going to improve their earnings and their profits, and it's going to push stock prices higher. I can also tell you that W patterns near the bottom of a previous low are likely going to resolve to the upside. Okay? And why? Because this is something that is repetitive throughout the whole entire market. In every chart, it is all based on evidence. Okay? It's not based on what I think or feel, um, or what the political talking point is, um, or what I've said in the past. I'm going to defend it to the death. All right. It's not based on any of that. It is all based on evidence. Okay. So enough of that. Let me tell you what I think is going to happen um, in the future based on this evidence. And let's take a look at the stock market in recent days. And what we see here is a rising wedge, and rising wedge usually leads to the downside. If I can only speak. So, is a correction in order? I would say yes. And I've been saying this now for about 2 months. Does that make me a bear? No, I'm not a bear, because I think this can continue to go much, much higher. Okay? Now, would I be telling you to go out and borrow money and, you know, sell everything and go buy stocks? I'm not saying that either. Okay? So I need you to understand when I'm saying that it could go higher, it doesn't mean it will go higher, and it doesn't mean that you should start, putting all your money in the stock market. So, again, based on evidence, you will get pullbacks in the market. All right, you will get pullbacks in the market. It's just the way it is. It goes up for a period of time, comes down, and it goes up, and then it comes down. And I think this is one of these points that we're going to pull back. Now, how much are we going to pull back? I cannot tell you. But I can tell you that the likelihood is that this is going to break, and we will get a pullback. Now, what is also self-evident, and you don't need me to tell you this, but there are 3 to 5% pullbacks are very common. So if we were to measure from the top how much we've come down, it's about 3%. And this is very common, and we could very well bounce from here. Okay, 5% would be somewhere around here. That's a 5% pullback. So we could definitely see something where the market continues down to here, bounces up, makes a new high, and then reverses and comes back down to test the long-term support. Does that mean that that's what's actually going to happen? No, that is called projecting. Okay, so this is what I'm expecting one of the scenarios to play out. The only thing we care about for the next week is to see how this price action reacts near the bottom of the trend and the bottom of the structure of the wedge, the ascending wedge. Okay, that's all we care about. If it breaks, great. Okay, but should you be shorting here? Should you be going out and betting against the market here? And my answer is no. When you should have been going short the market was up here or up here. Okay, and why would you do that? Because there is a structure in place right in here that was showing downtrend. Okay, now when it starts doing this, comes down, if it breaks, guess what? You're already in the trade up here. If it breaks out, guess what? Your loss is very small. So your risk reward is very, very favorably. Now, ultimately, it broke through. That's fine. Okay, does that mean that this structure has been violated? And the answer is no, it hasn't. Okay, and that's what I teach. I teach you how to understand structure, how to understand movement of price, and what it means. So it came back up, all right, and again, let's go short in here. Why? Because the likelihood is it will come back down again. If we're wrong, and we can never know what the future is, then guess what? The stop is once again very small. In both cases, I ended up being right down here and down here. How right was I? Well, you can see out of these 12 trades that I'm roughly about $30,000 up. Okay, now granted, this is a very big account. Okay, most people don't have these kind of accounts, so don't be fooled by the numbers. Okay, but to a normal person, this would probably be about a $300 gain or a $3,000 gain. Nevertheless, it is a gain. Okay, and I've been right 10 out of 12 times. So it works. It works. Does this mean that I do this every day, that I make $30,000? No, I don't do that. There are only certain times of the year. There's only certain times in the chart that you can make this kind of money throughout the year. Okay? And don't think I don't take losses. I do take losses. Okay? I'm not trying to mislead anybody here about what I do. Okay? But the net effect over the course of 1 year is that I make money. Okay? Not by guessing, but by looking at the evidence and following that evidence that is repeatable, and the likelihood of something happening over the course of time happens more often than not. Here's a chart of the dollar index, and as you can see, I have put in the recessions, I have put in the titles of each move. Okay, the dot-com bubble, okay, the financial crash, and so on. But what I want you to focus in on, because you've been hearing a lot of negative news about the dollar lately, that the dollar, especially all the way back here in 2007, when Peter Schiff was saying the dollar's going to crash, hyperinflation, and all this bullshit, that the dollar has been in an uptrend. Okay, you cannot deny it. It's been going up. And what you're listening to now in the media is that the dollar is falling, it's crashing, it's doing whatever. Okay, and it has been, but in the context of this structure, and in the context of this whole entire move, nothing goes up in a straight line. Okay, nothing. You can see here there was pullbacks, right? And then we got the thrust up, and then there was a pullback, and a pullback, and then we get another pullback. Okay, that doesn't mean that this is a downtrend. It means that we are near an area that we are likely going to reverse to go up one more time. Okay, doesn't mean that's what's going to happen. It doesn't mean that. What it means is that it's likely to. Now, if this were to continuously break down, then we're wrong. It's very simple. There's nothing wrong with being wrong. Okay, we're always wrong in life. So if we take a closer look, what you'll see is this formation where it accelerates to the downside. We build a flag down here, and then we take this to a smaller time frame. You can see it better. Okay, so basically what we have is a formation, a structure that's going, it's rising, and if this were to break to the downside, then we could see that one more move down before we reverse higher. Okay. The other thing is that if it does hold and then breaks here, okay, then we have a very large move coming to the upside. So learning how to read structures and the charts properly is important. It's very important. And being able to contrast that with what's going on economically is also equally as important. But to do that, you have to understand economics. And you cannot be going out running around saying that, hey, the government is doing quantitative easing and it's money printing and the dollar's going to collapse and gold's going to go to 10,000 when the whole entire time over the past, almost 10 years now, the market has been going straight up in the dollar. You're wrong. And you need to figure out why you are wrong. And you can only contrast economics with the stock market or the forex market if you understand proper economics. You cannot claim a debt. The government is in debt, okay, and not understand that on the other side of the ledger that it is private sector assets. Thus, it is a big zero. Okay, it's zero. There is no debt. You can't be in debt to yourself because the government, who is in debt, okay, to the private sector is holding the assets. Okay, so the net result within that economy is zero. And as the economy improves, okay, unemployment starts to fall, earnings start to rise, guess what? The dollar is going to rise as well. Okay? You cannot go out and start saying that, the dollar is going to crash because you don't know what you're talking about. And you need to figure out why you don't know what you're talking about. The stock market is not going to start soaring to new highs, okay, historical highs, because deficits are bad. The opposite is true. Government deficits, high government deficits, result in an uptrend in stocks and an improvement in the economy. Surpluses do the opposite. It's not going to happen in a day, and it's not going to happen in a month. It happens over the course of time. Just because government deficits are good for the economy, okay, it does not mean that we can go out and spend willy-nilly and everything will be fine, and we're going to have a free lunch, and we should have, job guarantees and all this nonsense. Okay, it's not about a free lunch. It's about productivity. It's about helping people within this the economy that is functional. That's what it's about. If you're going to print up money out of thin air and increase deficits, okay, to give it to savers who are not in the functional economy because they're saving their money, and they take that money and speculating in the stock market or the forex or the bond market or whatever, or commodities or whatever the case may be, real estate, okay, that's not productive. Okay, it's not in the functional economy. If it's not in the functional economy, you're not going to see an improvement in your everyday life. You need to understand the quality of the deficit. And finally, we'll end the video with this piece of analysis in the Euro USD. I think there's still more upside. As you can see, that this structure in here likely will resolve to the upside. We could break the trend line and then still it would be bullish to the upside. I think we'll at least get to the top of this previous high. Okay, and then perhaps a little bit more before it reverses back down again. Now, something I want you to think about, that if you are bearish down here and you're bullish up here, and I'm talking about over the course of a long time, I'm not talking about this piece of analysis in here, that you are definitely doing something wrong. Okay, very wrong. It should be the opposite. You should be bullish down here, and you should be thinking bearish up here, not the other way around. And you cannot do that unless you really understand what you're looking at. Okay? It's not oh, it's too high. It's going to fall at some point. That's not the kind of bearish I'm talking about. Okay? The kind of bearish I'm talking about is the kind that you understand that the structure and the formations are starting to break down, and analyzing the entire market as a whole, as opposed to, oh, look, this line went up and this one came down. It's not what I'm talking about. Okay? It's too high. Well, yeah, it is too high. It doesn't mean I can't take a trade to the long side. But I am looking for evidence, okay, that it's going to reverse at some point. So that's it. If this is something that you are interested in, please join me on Facebook and Patreon. And Patreon subscribers have access to me during trading hours via Messenger on Facebook. Well, I'll give my analysis for the day. We'll talk about charting. You'll give me some feedback of what you're looking at, and I will either correct it or agree with it, or show you a different way of looking at something. Okay, that's it. Thank you very much. I hope you join me, and we'll talk to you hopefully on Messenger soon.
Before this battle's over, the world will know that few stood against many.